Hi, this is Tanesse Chang-Gyles with Niagara Homes. Today we're going to be discussing investors owning 30% of the housing market. But before we get into that, if you find this information useful, please click the link below and subscribe to my channel. If you're looking to buy or sell a home in Niagara, please feel free to reach out to me at Tanesse@luxuryniagarahomes.com, or you can reach out to me on my direct line, 416-875-9001. Yes, I still have a Toronto number because that's where I started my business over 10 years ago. But without further ado, let's get into it. Welcome back to Real Estate News, your source for the latest updates on the Canadian housing market. I'm your host, Tanesse Chang-Gyles, and today we have some eye-opening news regarding the role of investors in Canada's housing market. The Bank of Canada, BOC, has just released a quarterly update that sheds light on a significant development: investors' influence on Canadian home prices. Canadian home prices have been on an unprecedented upward trajectory in recent years. It appears that investors are playing a substantial role in this trend. According to the latest data from the BOC, as of the first quarter of 2023, investors accounted for a staggering 30% of mortgaged homes purchases in Canada. This percentage has been steadily increasing over the past year, rising from 25% in the second quarter of 2022 to 26% in the third quarter, and finally reaching 28% in the fourth quarter of the same year. Investors' presence in the Canadian home ownership market is at an all-time high, comprising 30% of recent sales. The BOC has noted a continuous increase in investor participation, amplifying housing price cycles. The surge in investor demand is contributing to the intensified bidding pressures and rising home prices. While investors are certainly making their mark on the housing market, traditional home buyers, both first-time and repeat buyers, continue to play a vital role. However, their presence in the market has been gradually shrinking, primarily due to increasing affordability challenges. In the first quarter of this year, they jointly accounted for approximately 70% of home purchases, down from 72% prior to the first interest rate hike in March. Traditional home buyers, including first-time and repeat buyers, still make up the majority of home purchases and had been facing affordability challenges. Affordability issues have led to a decline in the market share, dropping from 72% before the interest rate hike up to 70% in the first quarter of 2023. It's important to note that while investors are a significant factor in Canada's housing market dynamics, they are just one piece of a larger puzzle. The BOC's report also highlights another concerning trend: the increasing prevalence of house flipping. House flipping, defined as homes resold within either 6 or 12 months of the purchase, has been on the rise since 2021. Investors are a crucial factor in the housing market, but they are not the sole cause of the current situation. House flipping activity has been increasing, potentially indicating speculative behavior in some of the local markets. In conclusion, the Bank of Canada's latest report underscores the growing influence of investors in the Canadian housing market. Their presence, currently accounting for 30% of recent purchases, is contributing to intensified bidding pressures and rising home prices. However, it is important to recognize that they are a part of a more complex issue that includes affordability challenges and increased house flipping activity. Thank you for joining us on this episode of Real Estate News. Stay tuned for more information on the Canadian housing market. If you liked what you've seen today, please click the link below and subscribe. And again, my name is Tanesse Chang-Gyles, owner and CEO of Luxury Niagara Homes. Bye for now.